Hi there. Good morning and a happy new year to you. My name is Victor Aluyi and I'm the head of investment advisory at Sankore Global Investments. And this is your weekly financial markets update. We start off in the US market where stocks rose on Friday, essentially snapping a 5-day losing streak. The S&P was up 1.26%. The Nasdaq added 80 basis points, while the Dow was up 1.77%. Again, tech stocks were the bright spot for the market, as it looks set to continue to benefit from increased investments in AI. We saw Microsoft basically saying that it was going to invest about $85 billion in building AI-enabled data centers in the year 2025. Again, if you look at the sort of investments really that have gone into AI, if you compare it to what we had in the dot-com bubble, particularly at this stage of the cycle, you would see that there's still a lot more investment that should be going into AI. So that basically has kind of significantly boosted the market. We saw it do that very strongly last year, and we saw that creating that recovery that we saw on Friday. Now, in spite of the recovery that we saw on Friday, all the major averages posted a losing week. The S&P lost 0.48%. The Dow was down 0.6%, while the Nasdaq was 0.51% lower. Also, the much anticipated Santa rally sort of failed to materialize this time around. We saw the market cooling off in the final weeks of 2024. Nevertheless, the major averages are still, pretty close to record highs, particularly on the back of the fact that, last year's performance was still, quite strong. So if you look at the performance last year, the S&P surged about 23.31%, building on a 24.2% from last year. So if you look at the gains over the last 2 years, 2023 and 2024, we've seen a gain of about 53%. And this really is the best that we've seen since we saw a nearly 66% rally between 1997 and 1998. Meanwhile, the Dow added 12.8% in 2024, while the Nasdaq, outperformed with a gain of 28.64%. Again, the enthusiasm, surrounding AI and all of its potentials around productivity really helped to power the averages to a string of record highs throughout the year. We saw stocks like Nvidia, Microsoft, Apple also doing very well. Nvidia posted a 171% rise in 2024. Going into this holiday shortened week, because the market is going to be closed on the 9th of January in honor of, late President Jimmy Carter. So we're just going to have about 4 trading days, this week. The market is basically going to be looking out for the jobs reports that will be due on Friday, basically looking to see clues around the strength of the economy, and also to kind of get signals around, the Fed's, rate path going forward. This data point will be the last major one before the Fed meets, later on in the month. Also, movements on the 10-year US Treasury would also be very, very, significant to watch, particularly in reaction to, the job numbers. Nevertheless, we think that participants sort of remain quite optimistic about the year 2025, particularly with CEOs really staying upbeat about the potential for profit growth around, a Trump presidency that is, believed to be friendly towards, businesses. So for the US market this week, we'll basically be looking out for that jobs report to give us a sense of the strength of the economy, the resilience of the job market, and also could give us indications around what path would be, going forward. Here in Nigeria, last week, the Treasury bills market basically traded on a mixed note. Activity slowed, especially in the wake of the announcement of an OMO auction, with attention basically shifting to auction positioning as participants essentially awaited, results. Nevertheless, the market could. We saw strong demand for, December papers, just on the back of, ample system liquidity. Yields basically declined about 2 basis points on average during the week. For the OMO auction, the central bank offered to sell about 500 billion and essentially sold, exactly, what it had offered. The offer was oversubscribed by about 431 billion. Stop rates were pretty much the same as previous stop rates, and the sentiment was largely the same within the bond market. Really, I think the key thing was participants are essentially looking to see the Q1 bond auction calendar to give a sense of government's leaning in terms of borrowing, and this will certainly begin to sort of have some impact on the local bond markets. In all, bond yields declined by about 1 basis points last week. So for this week, really, in the global markets and for the US, really, that jobs report will prove really, really crucial for our local markets. That bond auction calendar is something that participants will be certainly looking out for. That's pretty much it in terms of our review for last week and our update for how we're seeing things essentially shaping up going into this new week. Thank you very much for your time, and we hope that you have a very, very productive week and a happy new year once again.